Most retirees worry about volatility, those everyday market ups and downs. But volatility isn't what ruins your retirement. The real threat are what we call fatal fluctuations. Those massive crushing market drops of 40, 50, even 70% or more that then proceed to take 12, 15, or even 25 years just to recover. If you're in your 30s or 40s, you might have time to ride that out. But if you're in your 50s, 60s, and for sure your 70s, and you're drawing your income from your portfolio and your investments, a fatal fluctuation can be devastating. It can slice your portfolio in half at the exact moment you need it the most. And it's not just the market loss that hurts. It's that you're pulling income while it's down, and that income drain locks in those losses. There's no time to rebuild. You've worked a lifetime to get here. A fatal fluctuation could destroy that in months. This isn't hypothetical. If you're a baby boomer or Gen Xer, you've lived through two fatal fluctuations. The first one, the most recent one, you'll remember that. That was the 2000 through 2013. It was the dot-com bubble crash, it was 9/11, and it was the corporate rating accounting scandal. Then you had the Great Recession, the housing bubble. And from peak to trough, back to peak, 13 years just to break even. And the other fatal fluctuation most of you have lived through happened between 1966 and 1983. That 17-year stall-out caused by the Vietnam War, caused by excessive government spending, massive inflation, and the oil crisis. Well, the market barely moved for 2 decades, went down and took 17 years just to get back to where it was in 1966. Couple that with double-digit inflation, and it was a financial nightmare. Now imagine retiring right before one of these or right into one of these. And imagine doing it without an income strategy, without a protection plan, and no way to rebuild. If your plan doesn't account for fatal fluctuations, it's not a plan. It's a wish. Remember the 4% rule, the idea that you can safely pull 4% a year out of your retirement portfolio? That rule was written decades ago when interest rates were higher and people didn't live as long and markets were more stable. Today, that rule is dangerous. If you're pulling income during a market crash, you're selling more shares at lower prices and you're digging a hole with no way to refill it. The market might bounce back, but your money, the money you spent, is gone. It doesn't bounce back. You don't need a withdrawal rule. You need an income system that protects you from fatal fluctuations and gives you peace of mind no matter what the market does. When you're working, market dips feel temporary. But when you're retired, drawing income every month from your portfolio, those dips don't feel like paper losses anymore. They feel like real fear. You start hesitating. You start delaying that family trip. You skip your grandkids' birthday gifts. You pull back on the life you've earned. That's not retirement. That's survival. And the worst part, the market doesn't care. It's going to do what it does regardless of your bills, your lifestyle, or your need for peace of mind. That's why a market-based income plan is like building your dream home on a fault line. Every tremor shakes the foundation. Volatility doesn't just drain your dollars, it drains your confidence. Here's the good news. You don't have to predict markets to protect yourself from them. You need income engineering. It's a strategy that doesn't rely on luck or guesses. It's a system, a deliberately designed income plan that works no matter what Wall Street is doing. And here's how it works. You segment your assets by purpose and timeline. Short-term needs get low-risk allocations. Long-term growth stays invested. Guarantee your fixed income needs. Lock in sources that pay for food, shelter, healthcare without market drama. Use tax-smart withdrawal strategies to stretch your dollars further and reduce unnecessary tax hits. Add some flexibility into the plan because the world changes. A good plan bends and it doesn't break. You know, markets are going to fluctuate. Politicians will argue. Interest rates will rise and they will fall. But when your income is engineered correctly, You're insulated. You're anchored. You have permission to live the exact life you always wanted. We've seen this work, not just in theory, but in real life. Hundreds of families, just like you, who've come to us worried, sometimes even panicked, about what the market might do. And we didn't just show them some 40 or 50 page complicated simulation about what could happen with their money. We asked one simple question. What does a great retirement look like for you? Then we built a plan backwards from your vision, not from market assumptions. You see, that's the difference. It's not about projecting hope, it's about reverse engineering certainty. And when the market dips again, and it will, you deserve to sleep at night knowing your plan won't. Let's strip away all the noise, all the charts, all the jargon, all the predictions. You only need to answer one question. Can I live the life I want, no matter what the market does next? If your answer is anything less than a 100% confident yes, then your plan is incomplete. Markets are not your enemy, but they are unpredictable. That unpredictability becomes dangerous when your income depends entirely on performance. Here's what smart retirees are doing instead. They're shrinking their exposure to fatal fluctuations. They're building income floors that create monthly deposits, guaranteed income regardless of market chaos. And they're making sure their legacy plans stay intact, even if Wall Street doesn't cooperate. This isn't about being pessimistic. It's about being realistic. It's about being prepared, because hope is not a retirement strategy. Certainty is. Let's call this what it really is, because not all market downturns are created equal. A 10% drop that rebounds in 6 months, annoying, sure, but survivable. A 40% to 70% crash that takes 12, 15, or even 25 years to recover, that's a fatal fluctuation. If you're pulling income from your accounts during one of those, it's game over. We've lived through 2 of these in the past 50 years. One from 1966 to 1983, and another from the year 2000 to 2013. Some retirees lost over half their net worth during this time, and many never recovered. And the next one, it's not a matter of if, it's a matter of when. That's why we engineer income that survives these fatal fluctuation storms, because markets always recover. But if your income plan doesn't, your retirement won't. So here's your next move. Join us for our next Retirement 101 class. We'll show you how to shield your income from volatility. We'll show you how to avoid the deadly trap of fatal fluctuations. We'll build a cash flow strategy that works in up markets and down markets and everything in between. This class is 100% educational, there's zero pressure, and it could save your retirement, because you didn't work for 30 years or 40 years just to cross your fingers and hope. You worked this hard so you could finally exhale. Finally exhale and start living the life you earned. Let's help you get there with a strategy that's stronger than any storm, that's stronger than any fatal fluctuation.